Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of March 11th, 2024. We're going to touch on where we are in the S&P 500 year to date. We're going to talk about some of the economic data that came out last week and what's coming out this week. And we will talk about the different sectors and their performance going forward. Then we'll jump into the live trades on the option trading platform. Guys, before we get started, if you appreciate the time and effort that goes into making these videos, if you can please hit that like and subscribe button. It really helps to get the video out to more people, and I really appreciate it, so thank you very much. I think it's super important that we understand the different strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves safely in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Use the link below and open an account with Moomoo. You can get 15 free stocks by depositing just $1,000 and earn 5.1% on your deposit and an extra 3% for 3 months, so 8.1%. Deposit just $100 and receive 5 free stocks. You get the free charting software that is great, and I use it today. You can set it up with all your key indicators and you don't have to pay for it. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's take a look at where we are with the S&P 500. This is the SPX ETF. We started the year at, actually this is for the week. We started the week at 51.37 and we ended up at 51.23. So we were down very slightly last week. Year to date, we are up about 7%. We started the year at 47.43 and we are now at that 51.23 mark. The forward PE is about 20.7 now, and the 10-year average is 17.7. Looking at the economic reports, for last week, we had some numbers come out. The jobless claims on Thursday came out, and it's 217,000, so just as expected. And the unemployment rate was 3.9%, so slightly higher than the 3.7% expected. Next week, this coming week, we've got some inflation numbers coming out. We've got core PPI on Thursday, and on Tuesday we've got CPI. 0.3 is expected for the CPI on Tuesday, and then we've got the PPI numbers coming out on Thursday. So depending on how the inflation numbers come in, that can really affect the market going forward. Taking a look at the FactSet Earnings Insight Report, we see that 3.4% is the actual growth rate for Q1 2024. And again, it talks about that 12-month PE ratio of 20.7 below the above the 17.7, 10-year average. So we are valued a little bit high right now, and we've had for Q4. 99% of the companies have already reported. And then if we move down and look at next year's numbers, I think it's down here around page 15 on this report. And you can just go into FactSet Earnings Insight and you can find this report. It's free. But talking about Q2, analysts are projecting earnings growth of 9% and revenue growth of 4.6%. So that's very positive going forward. And for calendar year 2024, earnings growth of 11% and revenue growth of 5%, and then continuing on in 2025, 13.2 and 5.8. So very positive going forward. And then I like to look at the PE ratios for the individual sectors, and if you look here, you can see energy is still low, so I like that value. Utilities is a good value as well. And then everything else, the forward PE, if you look at what it is today in the dark blue versus the 10-year average in the green, That's where you can see that these are undervalued. Moving on to the different sectors, if we look at the last week, 5 days, we can see utilities was way up. Tech was down and consumer discretionary down as well. Year to date, everything's up. Tech's up big, communication services is up big, and financials, they had a big week last week. They're up big, as well as healthcare and the industrials. The fear and greed index is, everybody's very greedy right now. It's 71. We came out of that, I think we were in the extreme greed last week, but the market did drop a little bit. So that's where that came in. And then if we go into the individual trades on the platform, I really like Adobe going forward. I've got a video coming out. They've got earnings this week, and you can see my extrinsic value in Adobe right now is $905. It's trading at 551, and my put spreads are at 515 and 505 and 530 in 6 days. So as long as we stay above that 530, I'm going to pull in that $900 or much of it after earnings this week. So keep your eyes out for an Adobe video that's coming out in the next day or two. AMD has done pretty well for us. If we look at AMD, it's really profited off that AI. All the AI stocks with NVIDIA are doing really well. Just in the last 30 days, we've made almost $1,500, $1,492 trading at AMD. So it's gone up big. And I like AMD. 200 is my target, but it's actually up above that now. It's moved up so much. Lately, you can see the way it's moved all the way up there. So I still like AMD going forward, but now it's at that range where I've got to look at what I'm going to do next. But we've still got quite a bit of extrinsic at 664 in it, and I'm in good position at 195. So I am comfortable with where we're at with the put spreads right now. Chewy, I've got straddle at the 22.5 mark, high IV rank. So yeah, it's because it's got earnings coming up on March 20th. And you can see the profit range. We're actually in the profit range now, even at 17.5, but we've got a huge profit range from 16.5 all the way up to above 28. So I do like this trade. We can go so wide because of that high IVR, that high IV rank. and because it's an inexpensive stock, a $17 stock, we can do a straddle or a strangle and not use too much buying power. But just over the last 30 days, yeah, we've only made $90, but as soon as we hit earnings, a lot of that, we've got another 144 here that can come in. DraftKings is another one that's done really well for us this year. In the last 30 days, we've made a couple $100, 226 in the last 30 days. We've just been trading leaps options and selling calls against them at 46. So poor man's covered calls, and you can see above 27 we're profitable, but we've done really well in DraftKings over the last year. GDX, the gold miners, is a new one that I put on. Gold was way down, and it's starting to move up. So I'm actually doing a poor man's covered call against the gold miners. Already, just last week, made $142 on this trade, and you can see I just put it on, just opened up the position, and sold the call on the 7th. So I guess that's Friday. And earlier in the week, on the March 4th, I put the trade on. So it's already jumped up quite a bit. But I like gold miners being long right now. Google has been down due to missing on their ad revenue on earnings, but I've got 3 put spreads on. Came up a little on Friday. It's at 135 right now, but we're just out of the profit zone. I just needed to move up above 137, and then I start making profit. But Google is good long term. I'll probably stay where I'm at right now until we get those inflation numbers this week. And if things move down, I might add on some more Google at even lower prices. So we'll see how that goes. IWM, the Russell, I like long going forward. We've got a couple of put spreads on in the Russell, and just in the last 30 days, we were in March. I rolled out to April, and I actually closed one, but yeah, we made $274. Here's the March and February, but just in the last 30 days, 274 bucks trading the Russell and looking long. L3 Harris, one of my favorite defense stocks, has done really well for us. It's at 214 right now. I've got put spreads on at 210. I've got one left in March and then two in April. And again, just last 30 days, we made 210. Let's see, last 6 months, we made $1,368. So not too bad. But I like L3, and you can see profitable down below 210, but all the way up as it moves up. And I think L3 is in an uptrending pattern. You can see the ascending triangle there, but I like L3 Harris. Lulu, I put on an iron condor. It was at the lower end of the range, the 450. It's trading at 460 right now. Big IVR because there's earnings coming up right here on March 21st. But you can see we're at the lower end of that range, but we're in the profit zone, and we stand to make quite a bit of profit in Lulu going forward. If we look the last 6 months, we've made 655 bucks trading Lulu. So it has been profitable for us, and I like where we are at the lower end of the range with it trending up right now. So I like Lululemon. We'll see how that goes with earnings. I did a video on Mara, and that's a crypto mining stock. So it's kind of a shot in the dark, but there's the Bitcoin halving coming. And I think that the miners and Bitcoin historically has done very well for even a couple quarters after this halving event, because the Bitcoin does go up. But check out the video if you're interested in Mara. I think there's big upside there over the next couple of quarters. ServiceNow is a great cloud stock where I was able to put on Friday a very wide iron condor from 680 to 840. So you can see we're right in the center, and earnings isn't until April 24th. So earnings comes after the April 19th. So I don't think there's going to be any big move, and we're at 680, 840 are our short strikes. So 640, if you look over, wait, is that what it was? Let's see, 680 and 840. So if we go here, we look, here's 680, and it wasn't down in that range. I mean, even all the way through December of last year, and then 840, it's never been up that high. So I like the range here on the iron condor, and I was able to collect $275 up front for placing that iron condor, and 41 days till expiration. NVIDIA, I haven't been trading it because I thought it was so high, but it was down on Friday, so I threw on a put spread. I think NVIDIA, I did a video on that, AMD versus NVIDIA, and I was thinking NVIDIA was priced so high, but because of the growth rate, it actually, when you take into account the PEG ratio, which is the price to earnings to growth rate, it's actually pretty fairly priced. So I think NVIDIA is going to continue to move up over the long term, and you can see it's been pretty parabolic until now. But with that pullback on Friday, I just said, hey, I've got to have something on NVIDIA, at least to watch it. The Qs is a bit of a hedge that I have against the rest of my positions. So when the market does move down, I'm hoping to make money on this and then just continue to roll it out. SoFi, I like this stock. I've done some videos on it. And we've got some leaps on 3 and 4. Got 11 different positions on, and SoFi's done pretty well, but it hasn't moved up like I thought it would. I think it's going to continue. Every time they come out with earnings, they crush the numbers and shoots up. So any down day, I'll look to buy more. Any up day, I may actually the calls selling covered calls against my leaps to make it a poor man's covered call hasn't really made sense to me because you don't collect much on such a low price stock with the calls. And the upside, I think the stock can double or triple on real good news. And so that's kind of the way I'm playing that. SQQQ is the inverse to the Qs. So when the Qs drop, when NASDAQ drops, this goes up, and it's kind of a hedge of protection. And you can see it goes up when the market drops. TLT and TMF are bond plays, and I put these on about 90 days before the first expected rate cut in June, and thinking that they're going to do well, and they actually both have already, just in 30 days that I've had them on, $290 in TLT I've made in 30 days, and then in TMF 350, so even better. So I like both these plays going forward. As interest rates come down in June, these will do better. They are at lows over here, you can see. So I like these plays. Let's see. Tesla, it's been kind of hammered and down. There's been a lot of talk about China and sales being down, and then also having competitive manufacturers that can manufacture very inexpensively. And I think when the Q1 credits start kicking in for Tesla, I think it's going to go up. But to me, I think it's a great buy right now at these levels at $175. I mean, you can see where it's been up here at close to $300, and it's down almost half right now. So it's just a matter of time until that moves up. So I'm going to stay long Tesla right now, and I've got 3 different put spreads on in Tesla right now, and $776 in extrinsic premium that we can collect as long as those stay up, above this profit range. And it's at 175 right now, so it's still profitable for me. But I do expect it to move up. Verizon, that's hovered around this 39.40 range, and it's done well for us. But I own the stock outright because it pays like a 6 or 7% dividend. I'll sell calls against it to have a covered call on when there's a big update in Verizon. But any move down, those calls profit, and I'll take them off, and that's what I've done right here. And with the big move, I even sold 100 shares recently of Verizon when it moved up way above 40. Wells Fargo had a big move up. Moved my call out to April and put on a 60, and you can see the profit here on the deep in the money call. But I like Wells Fargo moving forward, but it is, it has moved up quite a bit just recently, you can see. And then the last one we have on is ExxonMobil. Oil's moved up. I took off my crude positions, but you can see it's at 108 right now. I like ExxonMobil when it gets down to that 100 range, anywhere between 100 and 105. I've got a put spread on right now, but ExxonMobil's done really well for us just over the last 30 days with this move up. We've made $542, so I like that. If we look at crude, you can see right here, CL/CL, it's trading at 77. I like it when it's down in that 70 range, but it has had a bit of a move up. So I'm looking for that to pull back down, and then I'll throw on another put spread in crude oil and get more ExxonMobil. So that's kind of the plan there. We've got a few earnings out next week. We look right here, all earnings. You can see Oracle, we've got Dollar Tree, Dollar General, Dick's, Adobe, keep your eyes out for that video, Ulta. So there's a few earnings plays next week. Keep your eye out again for the Adobe video. I'll have that out shortly. All right, I put a link below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Let's get the video out to as many people as possible, and use the link below. Join Moomoo. Get up to 15 free stocks when you deposit $1,000 and earn up to 8.1% on your cash deposit. Leave a comment. Let me know what you're trading. Ask a question. I answer every one. Thanks for watching. I'll see you in the next video.